It's Good Friday, but we still do business. 55 minutes of that is what we're doing on Business Incorporated. Good afternoon and welcome to the program. Here's what we're discussing on the program today. That's bank recapitalization announced by the CBN, of course, the expectations and the possible impact. We'll look at some of those on the program today. What does an attractive and positive blue economy roadmap look like, at least for Nigeria? We'll look at that too. And then we'll move over to Kenya, where the government there has initiated a panda bond. We'll discuss that on the program today. You're welcome. This is Good Friday, but we'll do business. I'm Yini John Mekwa. Let's start from the global space. Well, unfortunately, most of those markets are not trading. Oil prices, for instance, we still have the numbers from Thursday. It went up. We told you that this morning, talking about global oil prices. No trade today, but Brent futures were up yesterday 0.5%, $86.49. And also for Brent, for WTI, also for May delivery went up 44 cents, $81.79. And well, it's a wrap up for the week when we look at the trading on the global oil space. And so these are the prices that we'll have to go to Easter with and resume on Tuesday. Even in the metal space, not a lot of movement going on there. Officially, the market is closed. And yesterday, the numbers yesterday, right there on your screen, spot gold was flat, $2,194.36 per ounce. U.S. gold futures also, that edged up $2,193.90. Spot silver was steady, $24.67. And platinum rose 0.7%. $900.35. Palladium was up 1.3% at $996.19. Well, now to that big story in Nigeria. It was late yesterday, and after almost 20 years since its last recapitalization policy for banks in the country, the Central Bank of Nigeria has announced new minimum capital requirement for all commercial lenders, and the CBN's latest directive comes barely 48 hours after the financial market regulator ordered the banks to expedite action on the recapitalization of their capital base in order to strengthen the nation's banking system. Well, let's get some more details on that in this report. In July 2004, the Central Bank of Nigeria, under the leadership of Professor Charles Soludo, announced the recapitalization of the banking sector from 2 billion naira to 25 billion naira with an 18-month deadline, which expired in December 2005. While this reduced the number of banks from 89 to 24 after acquisitions and mergers, the initiative is believed to have improved the efficiency and profitability of banks, leading to more contribution to economic activities. 19 years after, the Central Bank of Nigeria, this time under the leadership of Mr. Olayemi Cardoso, is set to raise the bar again.
Considering the policy imperatives and the projected economic growth, it is crucial for us to evaluate the adequacy of our banking industry to serve the envisioned larger economy. It is not just about the stability of the financial system in the present moment, as we have already established that the current assessment shows stability. However, we need to ask ourselves, will Nigerian banks have sufficient capital relative to the financial system's needs in servicing a $1 trillion economy in the near future? In my opinion, the answer is no, unless we take action. Therefore, we must make difficult decisions regarding capital adequacy. As a first steps, the central bank will be directing banks to increase their capital.
25 commercial banks have 24 months to increase their minimum capital base. Those with national authorization have a target of 200 billion naira. Those with regional authorization is 50 billion naira. For merchant banks, it's 50 billion naira for those with national authorization, while non-interest national have 20 billion naira and regional have 10 billion naira. The banks are expected to achieve this by injecting fresh equity capital through private placements, rights issues, and/or offer for subscription. Mergers and acquisitions are also allowed, and upgrade or downgrade of license authorization. While Nigeria's first credit rating company, Augusto, has rated all banks stable, Fitch Ratings has downgraded some banks based on the recent downward trend of the naira. However, for the CBN, the economy needs bigger banks that can accommodate more capital-extensive projects and sustain depositors' confidence. Hopefully, the CBN will be able to achieve all this with this latest round of recapitalization. Ini John Mekwa, Channels Television News. Yeah, that's right. That's what we're looking at this time with the Chief Executive Officer of Star Advisory Investment Limited, Mr. Kevin Kalufo. He joins us from our Abuja studio. Mr. Kalufo, well, it's Easter, so happy Easter, and thank you so much for choosing to spend some of this time with us.
Thank you, and happy Easter to you as well.
All right, so, I mean, the central bank governor told us this since last year, that track was taken from the bankers' night, so it shouldn't come as a surprise. And obviously, the central bank has its eyes on the plan or the target of President Bola Tinubu, which is to service a 1 trillion naira or $1 trillion economy. Do you think banks will follow the way we know what happened the other round, 89 cut down to 25, now we have 25. I wonder how many banks we will end up with.
Thank you very much for that question. I believe that a number of banks would have to adopt some M&A, but most of the tier 1 banks are in a good position. They really just need to add maybe 200 to 250 billion, and seeing how they are conquering the continent for the likes of Access Bank, GT, and many of the others who are expanding across Africa, UBA, I do not see a challenge in them raising the differential, maybe somewhere around 200, 300 billion. They can easily raise that. Nigeria's economy is quite highly liquid right now, and with the new policies by the central bank, which is keeping a lot of gunpowder sterile, a lot of capital sterile within the system, I'm sure a number of people in Nigeria would be willing to, put in money for private placements or share offers by these banks. So clearly, most of them will be able to raise it. I think of the tier 1 banks, only GTB has maybe about 300 billion more to meet up with the 500 billion target for the international banks. For the tier 2 banks who operate nationally, a number of them have maybe over 100 or 150 billion to meet up. I think the most precarious one at the moment might be Fidelity, who just acquired a Union Bank UK. So they are going to be heavily exposed to that difference. So they will be needing maybe somewhere around 300 or more billion to meet up with the 500 billion target for banks who operate internationally. So for me, it's a mixed bag for different banks. So each bank is facing a different kettle of fish. So I believe that there might be some mergers that would happen, especially for some of the tier 2 banks, and maybe some tier 1 banks like GTB might decide to merge with some smaller banks to ramp up, to meet up the. But let's not also forget they have a 2-year window to meet this target. So I think most of the mergers will not happen in the first year. They will most likely happen maybe when it's closer to the deadline. Most of them will happen maybe in the second year. That will be 2026, between 2025 and 2026. So I think it's they've given them enough time to meet the target, and Nigeria desperately needs stronger banks, stronger financial institutions, stronger insurance companies for them to provide the credit to grow the real sector. Considering the fact that, credit to GDP ratio, Nigeria is just about 14%, compared with the big economies who are doing over 100% credit to GDP ratio. We do need massive influx of this funding. So I think the next thing for the CBN to do would be somewhere down the line when they start easing this policy of CRR at 45%, they might do well to connect this and make it that whatever money they are releasing for banks to now use in doing business should be strictly targeted at the real sector. Yeah. They should prevent them from putting those money into treasury bills.
So that's what I wanted to ask. That, I mean, it does not automatically mean that stronger banks will make more funds available to the real sector, because of course you do have the interest rates to consider, and you do have issues like inflation and the purchasing power of the real sector and all of that. So, I mean, we might have stronger banks or more funded banks, but I don't think that automatically translates to more funding to the real sector.
Yeah, you're very correct. It doesn't automatically translate to more funding to the real sector. Seeing what has happened since the new policies around FX, you can clearly see that with the sterilization of the funds within the financial sector, there's been less pressure on the naira because there's been less trading in the dollars. So you can clearly see that some people make more money. A lot of the financial institutions make money from investing in treasury bills, government bonds, than doing the real mediation, which is lending to the real sector to create wealth, So there's that issue that banks seem to be more comfortable funding treasury bills, giving government money, what they consider zero risk, and trading in FX and things like that, So for the economy, for it to translate to what the government wants, they need to be able to curtail that to prevent the liquidity. Once they ease the CRR and the liquidity ratio, they need to be able to curtail what they use the monies that they will be releasing for them to trade with into funding the real sector, because that's the only way we will be able to have that growth in the economy that we desire.
So another aspect is obviously because the central bank has noted that it is new funding that they need, it's not existing one. So I guess the capital market is going to get really, really busy before the end of that deadline, which is in 2 years.
Yeah, the capital market will get busy. Though I would also say that a lot of the new funding would not necessarily all come from within Nigeria. As you can currently see, with the new policies, the FPIs have suddenly found Nigeria their new beautiful bride. So there's a lot of money coming in from outside the country. So we would find also foreign investors keen into this opportunity to invest in Nigerian banks, especially for the banks that are, efficient, who are profitable, especially for the banks who are also expanding across the continent, like the likes of Access Bank, UBA and all that. They would be very attractive to foreign investors as well. So it's going to be rosy for those big banks, but for some of the tier 2 banks, they would have to dig in deep. They would have to hit the market early. They might even have to adopt multiple options of both private placement, the offer to the market, and many other options. They might even have to, at the end of the day, still do some merger and acquisition, because clearly some banks will struggle, a few banks will struggle to meet this requirement.
As you noted, I think
the time frame.
We are expecting some mergers and acquisitions, yes.
Yes, definitely. A lot of the tier 2 banks would be, there will be targets for acquisition by the stronger banks. It's also an opportunity for entry for maybe some international players, international banks who are seeking to acquire local banks. This might be an opportunity for them to come in, acquire some local tier 2 bank, and maybe even increase their capital and take them forward, and eventually they become tier 1 bank. So a lot is going to happen in these next 2 years in the banking sector. The only desire for everyone is that this would translate to increased credit to the economy. 14% to GDP, credit to GDP ratio is abysmal. We should find a way to increase it to at least 50 to 70%, and from then on to meet up with the big countries who are doing over 100% credit to GDP ratio. Nigeria is poorly funded. Nigerian private sector is very poorly funded. Barely 5% of Nigerian companies have ever accessed any form of credit from the banking sector.
So just briefly now, Mr. Kulafo, what's the fate of investors in some of these, especially the tier 2 banks, that may get, acquired or merged and all of that? What happens in such scenarios?
So it depends on who is acquiring. If it's a strong player that's coming to acquire, they might have a better deal. If it's a big tier 1 bank that's acquiring them, they might have a better deal in terms of economies of scale, in terms of profitability for them on the medium to long term. But if it's a private equity firm who is coming to invest, they are not coming to invest just for the sake of growing the business long term. Most times they will come in, they have an exit period they have in mind. So if you have a core investor coming to invest who has an exit period of maybe 5 to 7 years, there will be a lot of things that will happen. There will be a lot of cost cutting, and investors might not get the best deal, because whatever pays the core investor is what will happen, not necessarily what happens to the retail investors who own, little shares in those banks. So it's very important that the boards of such banks prepare a strategy in how they want to meet up with these requirements that would enable them retain value for existing shareholders.
And they do have, I think, till is it middle of next month to submit their plan, how they're going to, and I guess this should also be made known to investors, because a lot of reassessments of portfolios, I think, will happen on the stock market.
Yes, clearly a number of banks would be considered risky in terms of investment. Some investors might dump some bank shares. Banks that are considered unlikely to be able to meet the new requirements would have their share prices depreciated because there will be dumping of such shares. But coming from the standpoint of an investor, you'd also want to consider that if you have a very good idea of what the bank strategy is in meeting these capital requirements, it might actually be a good time to invest, as a new retail or core investor at this point, before they go into the full capital raising mode. It might be a good time to come in when it's cheap. So when the prices are depressed, some investors would take position, and expectedly somewhere down the line, when the strategies are made public, and when maybe you have some private placements happening, and they can now clearly see that they are clearly on the road to meeting that requirement, that the prices will appreciate on the stock market. So it's still wait and see for me, but for some banks, it's a no-brainer. They are going to meet the requirements very easily. But there are some banks that might be slightly challenged.
All right, well, coming days will reveal a whole lot, both for investors, the banks themselves, and the regulator. But thank you so much for your time, Chief Executive Officer of Star Advisory Investment Limited, Mr. Kevin Ekola, for joining us today.
Thank you for having me.
And talking about investors, now let's head to the market. The market is closed today. We have numbers from yesterday, and it will be closed until Tuesday next week after the Easter holiday, when I believe we will start seeing movement around the bank stocks, seeing that this recapitalization obviously affects the bank. But Aniti Edet has details on this. Aniti, I don't know if you have started talking to your investors, especially the banking counter, the most liquid counter. We expect a lot of movement in the coming days and months.
Yes, Ini, I'm glad you mentioned that, because banks are actually, that's where we all go to for money. And of course, the liquidity, this is coming almost 20 years after. So I spoke with one of the bank bank managers, and for him, he says, well, only time will tell, because the time frame in which they're giving them, there's enough time, but at the same time, there's also concern that some may not be able to meet it between now and maybe the middle of next year. So it's just a question of time. But I would commend the CBN for this latest directive, because it's better late than never. So now we were talking about the markets, the regional Africa trading day. For Thursday, Friday is a public holiday across major parts of the world, particularly in Africa here, where Good Friday is being celebrated in some countries. But take a look at Thursday's performance for Nigeria's stock market, 0.27%. It has been able to maintain the green, the rebound that it staged in Wednesday's trading session. So we're back at the 104,000 points and still climbing higher within that index level. And the same thing for the South Africa JSE, that's the Johannesburg Stock Exchange's index, 0.85%. That's for Thursday. On the other side of the market, still within the continent here, Egypt was down by 2.3%. Wow, that's a very massive shave off from the initial figure, which the index, the EGX 30 was. While for the Kenya Stock Exchange, Thursday it was down almost 4%, 3.98%. Now we're still talking about the Nigeria's market, but this time on the financial market side, not on the equity side. So we'll be looking at more about this news from the central bank, which of course has caused lots of reactions, whether the good side or on the bad side. So we'll be having analyst Caleb Alimi, a chief dealer at Providence Bank, to give us details about this latest directive from the central bank. Thank you for joining us, Caleb.
Good afternoon, Anita. Thank you for having me.
Now, I can see that the CBN has been very busy within within the first quarter. We've seen lots of actions from the central bank, particularly in terms of interventions, as well as trying to stabilize the economy, and then this time for financial stability of the lenders. Now, my first question is that there are concerns that this recap deadline, because we have the tier 1 lenders, and then we have the smaller lenders. Then we also have the ones who are not listed on the Nigerian Stock Exchange. So now, what impact is this going to have on the market for the ones that are listed and the ones that are yet to be listed on the market?
Thank you, Aniti. The governor of the central bank, Mr. Yemi Cardoso, has been very busy, especially in this first quarter, and even since he resumed, we've seen a lot of policy change since it came up. But this is not sort of like a surprise to the banks. The banks have expected this from sometime last year when he spoke about, preparing for the FX, shocks that could happen. And this is just like the next step that has come to play. He's given a 2-year window for it to be complied with. And then he said, the plans to recapitalize should be submitted within the next 30 days. Like I said, it is not exactly a surprise to the banks. Many of them are been preparing for this, and I think 2023 financial gains has also helped some people position better for this. Like you mentioned, some of the what you call tier 1 banks, UGAs as many people call them, have sort of been prepared for this. Their balance sheets are well capitalized for this. We could just see them move a few numbers around. We could see some of them also come to the stock exchange to raise additional capital for this exercise. And we would also see a fresh waves of possibly mergers, business combinations, acquisitions, and all of that, so we should expect to see some of that in the coming days.
Okay, so now let me be a little bit up close now. Your company, that's Providence Bank, which is not listed on the Nigerian Stock Exchange. We know that there'll be fresh moves by several banks to raise capital from the Nigerian exchange, and then of course the IPO market, which has been redundant for some time now. So now, if all this comes to the market, what impact do you see it having on the overall economy?
It's a positive for the economy. You know, the governor said that the way the country is moving, from direction from the president, actually, if it's going to run, I think, a $1 trillion economy, then you need the financial cog in the financial wheel to be as efficient as possible. So this is an interesting time for the market. I think the country as a whole, especially if you look at what has happened on the Nigerian Stock Exchange, from last year up to date, it has shown resilience, and it has shown that investors are willing and ready to be part of this change that is going to happen in the banking industry. And you'd also see, like I said, that investors have, you know, sort of kept their have investments, have monies to help these banks recapitalize. If you look at all of the sort of lending that the federal government has been doing over the last over Q1. The government, as the borrower, has borrowed over somewhere around 6 trillion from the economy, and the banks are coming in to borrow rough estimates from analysts around, or to raise rough estimates from analysts around between 2.5 trillion to 4 trillion. I think, and it's a 2-year window to achieve this. I think the banks and the economy in general, the country in general, is ready for this. I think it's a positive for real businesses. We're going to see manufacturers, you know, actually be really well supported by the banks. We're going to see banks' single obligor limits expand. We're going to see a lot of banks are going to be better positioned to support the economy grow. I think this is a positive for the nation as a whole, and I think the country is ready for this, and I think economically we will come out of this better.
Okay, so now just in 60 seconds, Caleb. So now, with that being said, we move away from the CBN's recap deadline and over to the fixed income market. We've ended the first quarter officially this week. So going into Q2, which starts on Tuesday next week, where do you see the fixed income market going? What direction do you see them taking, especially when we look at the bonds calendar will be out from next week? So what's your permutation on this?
We think the government will continue to borrow. We think the government will continue to borrow, like I said, anywhere between, and we expect yields to actually remain elevated. We've seen, you know, in Q1 that yields are continuing to rise week on week, month on month. We think that is going to continue. We think the central bank is also continuing to remain hawkish by keeping interest rates high. There was a recent hike in the NPR that has moved the NPR to 24.75. The next meeting for the MPC sometime in May, so it gives us about a lot of time to see a lot of changes in the market. We think fixed income will continue to get supply. We expect the DMO to release a bonds calendar to target around 450 to 600 billion for Q2. Even though they targeted to raise that in Q1, they raised way more than that. We think they're going to come out with a calendar that says they want to raise between 450 to 600 billion, but they have the capacity to raise more than 1 trillion or 2 trillion. You know, as we've seen very high subscriptions at the various treasury bill auctions and bond auctions. So we think that this Q2, there will continue to be supply of debt, and the market will continue to demand higher yields.
Impressive. Thank you so much, Caleb Alimi, with your analysis of the Nigeria's financial markets. So now let's move over to the Middle East, where we see most of the Middle Eastern markets were closed. But for the United Arab Emirates, take a look at it. The Abu Dhabi was in the green, as well as the Dubai FM. These were the only two indexes that were trading for the Middle East at intraday. But for the other sides of the market, the Saudi Stock Exchange as well as the Qatari Stock Exchange, they ended Thursday in the red, 0.33% and 0.14%. And now over to the world's biggest market, the United States market, where we see the S&P. It ended the day mostly in the green, but where we see a red figure there. For Thursday. But with details of Thursday's trading for U.S. market, let's have our Washington correspondent, Maria Bird.
On Thursday, the U.S. stock market was mixed, as the Dow Jones and S&P 500 were both up at 0.1%. The heavy tech Nasdaq was slightly down at 0.1%. As Thursday closed out the first quarter of 2024, many investors saw this as a positive sign, as 2024 started off much better than they expected. The S&P 500 even saw greater wins than they were even expecting, and ones they haven't seen since 2019. It is also clear that investors are going to continue to watch the weeks and days ahead, as they will also be watching to see inflation reports that are expected to be released, to see if the U.S. economy can withstand over the next few months through the second and third quarter of 2024.
That was our Washington correspondent, Maria Bird, with details of Thursday's trading for the U.S. market on Thursday. Now, for the final one here, we have the Asia market. Of course, it's still, it's Easter, but today is Good Friday. But the holiday between now and Sunday in some countries extended down to Monday. They're in the public holiday. But the Nikkei, that's Japanese Stock Exchange Index, the benchmark index, the Nikkei 225, it was in the green, about 0.5%. Still within that 40,000 level, which it had felt has been oscillating between that figure and 39, flirting between those figures. Now for the Saudi Kospi, it was on Thursday, it was in the green, 0.03%. For Hang Seng's, for the Hang Seng of Hong Kong, almost 1% in the green. And then for the other two sides of the market, Shanghai, this Chinese Stock Exchange Index, it was in the green also. Most of the Asian countries' indexes, the stock markets were in the green, and they were tracking the gains, the gains that was recorded on Wall Street, particularly from the S&P 500, because you have many of the companies listed there from the Asian region, but also listed among the S&P 500 of the United States index. So that's it in a nutshell, and then we'll be looking out for how the markets open the first quarter starting in April.
Yeah, that's Tuesday. We still have some rest.
Well, some are on holidays, but we got to do our job. No holiday.
Yeah, well, you chose it. So.
Exactly.
All right, Anita, thank you.
Pleasure.
Now let's we'll move away from Nigeria or Asia, where Anita stopped. We'll go to Berlin or Dutch. You see that the Dutch government is putting its money where its mouth is, at least when it comes to the Netherlands' largest economy. That's in the area of chip equipment and manufacturers. Well, let's get the details of this. What does all this mean? What are the details of it? Cassandra, it's like us, not on holiday. Cassandra, good to have you on this Easter Good Friday day. What's the details of this money thing going to the Dutch company?
Thanks for having me, Innie. Well, the Dutch government said yesterday that it would spend 2.5 billion euros to improve transport and other infrastructure in the region around the ASML headquarters. The Dutch Economic Affairs Minister told reporters that these funds are part of a broader plan to keep ASML in the Netherlands. They're calling the plan, by the way, Operation Beethoven, and these funds will go towards improving housing, education, transportation, and even the electrical grid in this region over the next several years. This area is called Eindhoven, and it has turned into a bit of a technology hub recently. But this package isn't just about making ASML's current home as comfy as possible. In a statement, the Dutch cabinet also said that it's planning unspecified measures to ease the tax burden on businesses. This follows an outpouring of concern from Dutch blue-chip firms. Now, this pledge from the Dutch government, it's important not just for the Netherlands, but honestly for the whole of Europe. ASML is Europe's largest tech firm with a market cap of over $200 billion US.
Yeah, we learned that this conversation actually started with complaints from the ASML CEO.
That's right. So there are a few different factors at play here, but I'm going to try to lay it out as clearly as possible. So first of all, there was the CEO, Peter Vennick, going public this month with policy complaints, including government plans that would end a tax break for skilled migrants. ASML says that that would make it much harder to hire vital staff. ASML also said that the lack of infrastructure investment in the Eindhoven area is a problem. So amid those domestic, very practical types of concerns, there's this this chip war really brewing between China and Western countries. And since ASML is the largest tech company in Europe, that's important. And an important note here about ASML is that it is the world's only maker of a certain kind of UV lithography machine, which essentially is needed to make really advanced semiconductors. So Chinese leader Xi Jinping recently told the Dutch prime minister that, quote, no force can stop China's scientific and technological development. Those are some pretty strong words, but ASML said in January that the Dutch government is prohibiting it from shipping some of its lithography machines to China, and the U.S. is ramping up restrictions on the type of semiconductors that American companies can sell to China, even as it's pressing its allies to enact their own restrictions.
So I know there was also a survey of Dutch companies recently.
That's right. So that Reuters survey of Dutch blue chip companies found that more than a dozen were considering moving operations outside of the Netherlands. Like you said, many in the survey were complaining that after populist parties made major gains in a national election last November, that the parliament had been pushing through policies without considering the long-term impact. So politics is one part of this. All of the companies polled, including the Netherlands' main financial and industrial firms, said they were worried about predictable government policymaking, which they said was essential for their business. But despite these complaints, only a handful said that they would consider something as drastic as relocating their headquarters. Some, like heavyweights Shell and Unilever, already have done that. Others are prioritizing foreign expansion.
All right, Cassandra, thank you so much. And now you can go for your Easter holiday. Welcome back. Still Business Incorporated right here on Channels Television. We start around Africa from here in Nigeria. An interesting one is blue economy. We've been told that it has the potential of 296 billion, and out of that, 10 billion is from shipping only. Well, let's see how we can realize this potential with the former Director General of NIMASA, Mr. Dakuku Peterside, decided to spend some hours off his Easter with us. Mr. Peterside, good to have you in the studio. Happy Easter.
Thank you. Happy Easter too. Actually, today is Good Friday,
yes, Good
but
Friday.
I can say Happy Easter in advance.
Exactly, because I don't think I'll see you again from now till Monday, so I might as well make the most of it. So recently, you've been talking about an attractive roadmap, in the blue economy. Nigeria has a lot of potentials. So obviously the blue economy is not different. And when you hear numbers like $296 billion, you're like, what are we waiting for? You were formerly there as the Director General of NIMASA, overlooking, the architecture that's supposed to bring this to pass. Why have we not hit this 296 billion?
All right, first, thank you very much. It's nice to understand the concept of blue economy. And I like to go with the United Nations definition, the sustainable use of ocean and sea resources, the economic utilization of sea and ocean resources. And Nigeria is blessed with a vast ocean landscape, starting from 853 kilometers of coastline, 200 meters nautical mile, 200 nautical miles of sea lane. So, to that extent, we're endowed. I don't know about $296 billion size of the blue economy. I actually know that there's no scientific basis for that. Do we have enormous potential? True, we have enormous potential. Have we tapped into that potential? The answer is no. Why have we not tapped into that potential? Which brings me to your question. And there are enormous reasons for it. And I'll just go with a few. And this speaks to the first issue. Till date, we cannot say we have either scientific, qualitative, or quantitative data of what we have. At best, what we have is the fact that we know that we have 853 kilometers of coastline, and that our location is very geostrategic in Africa. And the fact that we are blessed with a lot of, we're of course, we are by the Atlantic Ocean, we are blessed with a lot of seas, rivers, lakes, and other resources. And so the first challenge is the fact that we're not able to get our data right. And I'll take you to the second challenge. Now, because we don't have data, or a database rather, more succinctly put, database of our ocean resources, we're not able to put in place a strategy to harness whatever resources we have. In addition, now this whole concept of blue economy is built on three pillars. One is environmental sustainability. The second is social sustainability. The third is economic sustainability. Now, these three converge at one point. You need to have in place a regulatory framework for the exploration and exploitation of our resources. That is not in place. Now, there is a regulatory framework for shipping. There is a regulatory framework for fishing. There's a regulatory framework for oil and gas activities. And maybe other sectors, aquaculture, mariculture, maybe there's maybe
because we have not had the Minister of Blue Economy until now.
It is very possible, but I'll come to that. So the second thing I've identified, the first one, is that we don't have a database of the ocean and sea resources we have, which is, by extension, the blue economy. The second is because we don't have that database, we don't have an overarching strategy to optimize the value in the blue ocean. The third is the fact that we don't have a regulatory framework, an integrated regulatory framework. I've heard arguments that there's regulatory framework governing shipping activities. That's very correct, that's true. There's regulatory framework governing aquaculture, both at the state level and at the federal level. There's no regulatory framework governing seabed mining and other forms of mining. There's no regulatory framework for other subsectors of the blue economy. So that's another challenge. Now, the other challenge is that we don't even have a business plan to attract people to invest in the sector. Now, if you want people to invest, you need to give them data. You need to give them a framework. You need to give them your long-term plan of how to arrive from where you are now to where you want to be. A strategic framework, a policy framework. Those things are not in place. And so there is no incentive for people to invest in the sector. A potential means that all of us have potential to speak 6 languages. Can you speak 6 languages? The answer is no, because you've not made effort to develop that capacity to speak multiple languages. Now, I can go on. We'd also have infrastructure to drive the blue economy. Now, part of the blue economy is, sea tourism or coastal tourism. Is that correct? Coastal tourism. Now, when you talk about coastal tourism, there's a lot of infrastructure that needs to be in place. Is it in place? We also have the challenge of security. You know what
I thought we dealt with
We've made progress with the Deep Blue project.
Exactly.
Yes, but are we there? We still have isolated challenges here and there. But before now, we have had this issue of security over the years.
So how do we start the solution?
Now, for me, the first critical thing to do is for the Ministry of Blue Economy to commission a study to generate a database of our ocean and sea resources. If we have ocean and sea resources that can be quantified and provide both quantitative and qualitative data, then that's a starting point. The other one is to put an integrated regulatory framework in place that will govern activities in the blue economy. Then the other one is to put a strategic roadmap in place. How we intend to go from here to where we intend to be. Where do we want to be with the blue economy? Today, Nigeria's GDP is calculated without input from the blue economy. And so, how do we capture the activities of the blue economy? So what is going on currently is that you have data on shipping activities. You have data on fishing, deep sea fishing, data on aquaculture. But all of this, and maybe tourism, maybe these things are not integrated at all. So there's no dashboard for us to see the contribution of blue economy to the GDP, if we're even leveraging on that at all.
So to you, this is what will make an attractive roadmap. But with the thing with Nigeria is implementing the policy is always where we have a weakness, and not just the ideas and even putting it down as policies.
Yeah, I agree that there's a challenge with policy implementation. But the first is to have an overarching vision. If you don't have an overarching vision, and I like to do an analogy. If you set out today, now, that I want to go to Ibadan, or you set out in the morning in your house, I want to go to somewhere, you don't name a specific destination, you might not get there. So if I set out now that I want to go to the island, Ikoyi, specifically, I want to go to Ibadan, then I now work out a roadmap. Which one is my best route? So we must have an overarching vision first. Then how do we get there? That's that roadmap. To get there, what do we have? What are the challenges we are likely to encounter? How do we mitigate those challenges? How do we overcome those challenges? Who do we need? What kind of help do we need? I think that analogy helps us to understand that, look, for us, we want the blue economy to contribute to the extent of 40% of our GDP in a given time frame. Now, how do we get there? What do we have? How do we get there? What are the challenges we are likely to encounter?
I mean, you are a former DG. Even though you're no longer the DG, I want to believe you're still a stakeholder. Have you initiated some of these conversations, All
right, I can tell you without being immodest. In 2018, 2019, the African Union convened the Blue Economic Conference, the Sustainable Blue Economic Conference in Kenya. And by the grace of God and the support of the Nigerian government, I was made leader of delegation and spokesman for the country. So I led the delegation, and that was the first truly global Blue Economic Conference, And so I presented Nigeria's statement of intent at that conference. And when we came back from the Sustainable Blue Economic Conference in Kenya, we did design a roadmap and present it to Mr. President. He accordingly directed that the office of the Vice President handled that. And it was from there we developed the first Blue Economy Framework. But we've not made much progress between then and now, and for several reasons. I just hope that now that we have a dedicated ministry, a lot more progress will be made.
All right, well, we certainly do hope so, and we will hold people like you to, be at the fore pushing that on. Former Director General of the MASA, Mr. Dakuku Peter-Sine, thank you so much for your time.
Thank you too. Thank you too.
All right, now, so let's go to where the Nigerian South African Chamber of Commerce believes that the built environment, away from the blue now, the built environment, that's those in the building sector, can contribute to accelerate the recovery that Nigeria needs from unfavorable macroeconomic indices. Well, they had this conversation at a forum here in Lagos. A surging inflation is everyone's business, although the Central Bank of Nigeria leads in finding a solution. The March 2024 forum of the Nigeria-South Africa Chamber of Commerce is joining in the conversation with a focus of taming inflation and high exchange rate with the built environment.
A lot of the inflation that's going on is actually price gouging. People can take advantage. Our economy is not really structured. We are not even getting the right data that we should get. And so someone is selling food, and food is a major item on the inflation, on the food basket, on the basket indeed of goods that are surveyed by NBS, Bureau for Statistics, every month. Food is a major item on it, and therefore there'll be a skew, because indeed it's a case of take it or leave it. People must eat. And indeed, you'll probably also find out that the farmers are not the ones making the money. Rather, it's the middlemen.
A bit higher up.
For economist and chairman of Phillips Consulting, Mr. Felicia Phillips, the whole structure of the country needs attention.
We need to build great institutions. And to do that, we really do need to see how we can get our leaders to become responsible. To get our leaders to be responsible, we have to establish a rule of law in this country. We have to establish an environment in which the law takes control and nobody is above the law and everybody are forced to behave in a proper way.
for many years.
Members of the built environment have found roles to play in this needed change.
The issues of how the built environment can help us to bring down inflation, to bring down high interest rates, to help tame some of the foreign exchange challenges. We're very particular about the role that maintenance can play in helping our economy out of the current doldrums.
The Nigeria-South Africa Chamber of Commerce says its belief is that the private sector can also make significant input in dealing with Nigeria's current economic headwinds.
So, questions and answers, please.
From there we go to Kenya, where the President William Ruto's administration is intending to debut a $500 million, that's about 66.3 billion shillings, Panda bond to plug the 2024-2025 financial year budget deficit, which is expected to be at about 703 billion shillings. So according to the 2023 budget policy statement, the government will continue to monitor the global financial market conditions in light of the increased cost of financing. The planned Panda bond will come after Kenya established an agreement with Nippon Export and Investment Insurance to issue a samurai bond valued at 66 billion shillings. From there, we go to the crypto space to see how that market is doing on this Good Friday. This is the market that doesn't slip, so a lot of the markets are not open. Crypto goes on trading in every way. If we could have the numbers right there for the crypto and see, I think we're still around, looking at the index, it's still extreme greed at 79 index points on this day. We look at the prices therefore, especially Bitcoin and some others, a lot of price action taking place in the market. Can we have the numbers, please? The number for the coins. All right, if we don't have the numbers, let's speak to our guest, Onua Obodo, joining us from Abuja. He's the Managing Director, Chief Executive Officer of Phoenix Online System. To share with us, we're counting down to halving. Hi, Onua, good afternoon and welcome to the program. Well, first of all, I think I'll have to say Happy Easter or Good Friday to you.
Can you hear me?
Yeah, I can hear you. I can hear you.
Good afternoon, Annie. Thank you for having me.
Yeah, great.
Currently, BTC actually traded about $67,000 yesterday, but today now is ranging between that 69,000 to 70,000. So this is due to a lot of volatility in the market and a lot of speculations from the stakeholders.
How would you say we're preparing for the halving?
Yeah, the halving is very close as we speak. Currently, we have less than 3 weeks to that, precisely around the 19th of April. So the halving is actually giving a lot of people some slight opportunity to actually key into the market before that time. Because normally we see halving happening every 4 years in the crypto space. So currently now we are in this next phase of the halving, which is 19th of April. So with that, it gives the Bitcoin an opportunity to most of the stakeholders to give you that opportunity for miners to actually reduce the price, which also drive price up. So there's going to be more volatility in the market, and with that, we can see the demand will push the price of Bitcoin up, and we'll see Bitcoin getting a new high.
Is it too late for investors to get on Bitcoin before the halving, seeing that it's about 2 weeks or so away?
No, not really. We have some other altcoins associated with the crypto space, not only Bitcoin. Bitcoin is currently sitting at $70,000, so it's quite high, except for the big boys out there. So, but we have some other coins that has the same project with Bitcoin that people can also take advantage of. So, in the trading space, as Bitcoin move up and down, most of the altcoins to actually follow that same trend. So, a lot of traders actually will be able to key into that situation, because we see a lot of altcoins to going as high as 100x, 50x and above. If you can't follow Bitcoin because of the price currently, you can also follow the altcoins too.
All right, Onua, thank you so much for that. Of course, we'll be following the market all through the holiday. The Managing Director, Chief Executive Officer of Phoenix Online System. Thank you for your time.
Thank you very much for having me. Yes.
So that's it. We draw the curtains and we head home for Easter after Good Friday. And then, of course, there's the Sunday. But we'll be back on Monday so we can spend Monday together. But Ladi doesn't have a choice. He has to be here tomorrow. So you can do that with him. Spend some time with him 7 p.m. during Capital Market. And remember, you can always watch Business Morning, Business Incorporated, anytime on our YouTube channel, which is www.youtube.com/channels web, and then you look for Business Morning, look for Business Incorporated, and you can see this program at any time. I'm Amy John Michael. I'm wishing you a restful holiday, even though it's just a couple of days. I'll see you on Monday.